Good evening, guys. It is 9:50 p.m. New York time on Friday, August 23rd, 2019. Hope everybody's doing well. You had a good wrap to the week. This is actually the second time I'm recording this video. I recorded it about 4 hours ago. If any of you had tried to click on the link I posted on my YouTube channel or on Facebook, you would have heard that there was no sound. Isn't that lovely? So I recorded a 17-minute video that nobody could hear. So that's just wonderful. So I'm going to do it again, and hopefully I don't forget everything I talked about earlier. So anyways, we'll get right into it. So I posted a video a couple of days ago, midweek, calling it the week flat-tastic, because it was a very quiet trading week up until, I guess, yesterday and then again today. And we'll get into what happened. And, the markets were really quiet all week. Because they were kind of waiting to see what was going to happen starting yesterday at the Jackson Hole Symposium. And again, that is the meeting of the many central bankers from different countries, from the major currencies meeting in Jackson Hole, Wyoming, here in the U.S. for their four-day meeting that started yesterday and will run through the weekend, where they get together and talk about global economics and policy, and it gives in the end, it'll help give a lot of direction to the FX market and the financial markets in general going forward, and kind of see what they're thinking. So the markets tend to have been range trading most of the week in anticipation of waiting to see what would happen, especially the U.S. dollar, Fed chair. Sorry for that brief interruption, guys. So at the meeting, Jerome Powell from the U.S. Federal Reserve chief spoke today. Didn't really give the markets too much more than what the market was already expecting, so there really wasn't a lot of movement from anything he said. That was part of what they were hoping, what the market was waiting to see, what Jerome Powell would say about any future rate cuts here in the U.S. after the one they did last month. Again, outside of what they've already said in their monetary policy minutes that came out and previously, is that, things are pretty good in the U.S. with the economy, and they're just kind of in a wait-and-see mode right now, and, would take action if appropriate. So it was kind of middle of the road, didn't really give the market a lot of direction. And so, but it'll be interesting to see what happens over the weekend. They'll be meeting all weekend, and be interested if anything unusual gets said that could really cause some volatility next week. I did have a few positions open after during the day today. I closed them all. I generally don't mind holding positions over the weekend, but given the fact that I opened them today, and I think there is definitely potential for price gaps on the charts as a result of Jackson Hole when the market reopens, I just felt it was better to take the profits I had off the table, and although I do think they will continue in the direction that I was in. So I probably will kick myself a little bit, but better to have it in the bank than to risk giving it back. Especially because the other thing that happened today in terms of President Trump stepping up the trade war talk with China, who knows what that will do over the weekend. And so, so really early on in the week, guys, the only real motion that we saw in the FX market was, this is the Aussie Kiwi on the hourly chart, and this kind of chugged higher. It was just holding this trend line all week, and basically it was, because the market was looking at the Reserve Bank of Australia, the RBA, maybe not being hoping that they're maybe not so dovish with some of the recent comments and data that's come out of Australia. So it's the market maybe hoping that they are not as dovish. And also the New Zealand dollar, of course, it was paired with, has been very dovish. And the RBNZ has been overall very dovish in their statements. They did pull back a little bit yesterday in saying that, we made a big splash. Now we're going to see what happens. But overall, they're probably still one of the more bearish currencies. So that's why the Aussie Kiwi just kind of chugged forward. And you can see it actually broke down today, though, and this is really as a result of the China-U.S. trade talks, because the Australian dollar and the New Zealand dollar are very dependent on trade with China. So whenever there's turmoil, we tend to see the Aussie and the Kiwi come under pressure. I actually traded this on the breakdown. I got out right at the 200 EMA. Again, I think this probably will go further, but I just chose to get out at this point and just take the small. It was a really small trade, but I grabbed I did grab a few pips on it though. So, outside of that, nothing really happened until yesterday. On Thursday, we had, with the British pound, as you know, everything that's been happening with the British pound really for the last couple of years, basically, has been around Brexit and about the British, the UK leaving the European Union and how that was all going to work. And there's been some concerns that there was going to be a hard exit. They weren't going to be able to come to an agreement with the rest of the European Union about how to kind of softly slip out of the EU. And now with their new Prime Minister, Boris Johnson, who was a very pro-Brexit guy that took over for Theresa May, they felt that in October that, and he pretty much said he'd have no problem it being a hard Brexit. And so that's really kept the British pound under pressure here for really, for a long time. Here's the pound Swiss on the daily chart. And all of this down move is because of Brexit concerns. Okay, but we did see it pop back up. And the reason why, especially this green candle right here, is on Thursday, Boris Johnson met with French President Macron and German Chancellor Angela Merkel, who are both obviously involved in with the euro. And they met with Boris Johnson and did put out at least a little bit of hope that maybe they can negotiate a better Brexit deal with the UK, when previously they were saying, nope, that's it. The deal's the deal, and whatever, take it or leave it. And Johnson basically saying, fine, we'll just leave them. So they came out after their meeting and were a little bit softer and suggested that maybe they could negotiate a deal. But quite frankly, I think that might be a little bit wishful thinking, because Boris Johnson, even if a deal was struck, he would have to be able to sell it to the British Parliament, House of Commons and everything to get that passed. And there's a lot of question about whether that would happen. But at least in the short term, there was a little bit of hope that they would negotiate a better Brexit deal, which is good for the pound. And so because of that, on Thursday, the pound spiked higher. And, we'll see what happens. But again, the pound is completely dependent on Brexit. And so if anything comes across the news going forward that's positive about it, then the pound will strengthen further. If it turns back the other way and it looks like, they're probably not going to negotiate a deal, we'll see it go back down again. So fundamentally, it's still down, but it did give them a little bit of hope. So all the pound pairs did this. This is the 4-hour chart of the pound Swiss, but you can go to any of them. And this big move back down was because of the Swiss franc and on the safe haven flows from today. So I'll get into that in a minute. But let's see what goes forward with the pound. This to me does look like kind of like an ABC correction, that this will head back down. From an Elliott wave standpoint, this looks like an ABC. We're back to the 200 EMA on the 4-hour, that we could go down from here. But again, let's see. But that was up until Friday, that was really the only big action in the FX market. But then today, around towards the end of the London session today, we had China announce new tariffs on the U.S. kind of in retaliation for, in retaliation for the ones that the U.S. has put on. And then Donald Trump tweeted after that that he would hit back too. So the trade war with China kind of came back into the news today. And if we look at this, I'll bring this up here. So this is on forexlive.com. China hits back, Trump responds with more tariffs. So if you go to forexlive.com, this is right on the top of the feed right now. You can take a couple minutes and read some of these stories. And this has really caused a lot of risk-off sentiment today, and because nobody was really expecting this. So because of the risk-off sentiment, the Japanese yen and the Swiss franc, which are considered safe haven currencies, really rally today. So all the crosses, anything that was paired with the Aussie or the Swiss franc, all went down as a result of this coming across the wires, and that kept, that sentiment persisted throughout the market the rest of the day today and into the close, and probably will continue next week too. But like I said, I did take some of those trades, but I just chose to close them, even though I think they will continue, as we'll show you in a minute. So you should definitely take the time to read this and understand what that was. And guys, just very quickly, if you don't know, when you say risk on, risk off, basically when the market is feeling really good and feeling aggressive and really thinks it can, wants to be more bold on its investment, that's considered risk on. And traders in the FX market will tend to buy up things like the Aussie dollar and the New Zealand dollar, which they can get a good return on, but they're a little bit more risky. And when the market is feeling a little worried or scared, like with trade war talk or real war or anything else that kind of upsets the global market, then that's considered risk off. And the Swiss franc and the Japanese yen are considered safe haven currency, so money tends to flow into those during those times. And the U.S. dollar can be a safe haven too, but it wasn't today because of the tweets from Donald Trump. And so, but normally the U.S. dollar is also a very good safe haven because the U.S. economy is the strongest and the biggest in the world. But outside of that, money flows back into the yen and the franc, so anything that's paired with it goes down during risk off, and that's what we had today. And so that's why. So if we look a little bit here, this is my trading view chart. This is the VIX. The VIX is a short-term composite of futures ETF, future stocks, and the VIX is a great sign of volatility in the market. And so when there's a lot of volatility and when there's risk off, the VIX will rally. And so we go to the hourly chart. You saw what happened. The trade talk heated up, the VIX rallies. So this is just a confirmation of volatility. And when things are calm and there's risk on, everybody's feeling good, you'll see the VIX go down. And so you see this long drop here. This is only an hourly chart, but you can see what happened here as a result of the trade war heating up. And if we go to the S&P 500, this is the U.S. Composite stock market of the S&P 500. You can see, traders on the stock market and the S&P also were really concerned about trade because obviously that affects companies' sales and profits, especially if they deal overseas. So it went down. And the only reason why it went down is because when Jerome Powell, the Fed chairman, spoke today and did not signal to the market that he wanted to cut rates, that the Fed was definitely going to cut rates more, the market took that as a negative because the stock market likes when the rates get cut because it makes money cheaper and it tends to lead to more buying and more growth, and companies can borrow cheaper money, and so that tends to drive stock prices up. But because he didn't really give the market any big hint that definitively that there'd be more rate cuts coming, between that and the trade war talk, that sent the S&P down. You can see, this did hit. Now on the daily chart of the S&P, we're sitting right at this 200 EMA. So this is a really critical area for this. You can see out of the last 10 or 12 trading sessions, we've had 1, 2, 3, 4, 5 stabs at this 200 EMA that's acted as support. So let's see what happens if this breaks through, in which case this has a long way to fall, and that will definitely create a lot of risk-off sentiment. That probably will keep the yen and the Swiss franc supported. Or will it bounce off and everybody will kind of level set, and this will head back higher again, in which case that will kind of quiet things down. So these, I don't trade obviously this index, and I don't trade the VIX, but they're just ones to kind of keep an eye on. I can't get them on my FX platform, so I will look at them on TradingView here. So with that being said, I'll just jump to the charts really quick. So we already talked about the pound, but basically if you go and look at any Swiss franc or US yen pair today, you are going to see big drops. It doesn't matter, just you could, if you happen to have been able to trade this today when you saw that news come across, you could have just thrown a dart at a dartboard with any of the yen or Swiss pairs and you would have made money. So here's the US Swiss, US yen, Euro yen, CAD yen, CAD Swiss, Kiwi yen, Aussie Swiss. So anyways, I took the Aussie Swiss, the Aussie yen, and the US Swiss. And as you can see, I've closed all of them now, but I still think these will go down more. The Aussie yen, you zoom out a little bit, is approaching these new lows. So I don't know how much further this one will go, though it could go a lot further. The Aussie Swiss, I think will get back to these lows down here at the minimum. So I think we'll at least come back to these areas here, which is about 40 pips from where it is now. The US Swiss, it's got, again, at least back to these lows right here, which is about 70 more pips. And I think we got a little bit further to go on this stuff. And let's see, Kiwi Swiss is approaching lows. I chose not to take the Kiwi pairs because the Kiwi I felt has already been beat up really bad in the last, you can see it's just been getting hammered. And because I mentioned earlier that one of the RBNZ central bank guys kind of softened the tone a little bit, not really, just again said that, well, we cut our rates and now we're going to sit back and wait and see what happens. So that kind of took some of the wind out of the sails about whether they're going to cut rates again in September. And so, that's why I think the Kiwi has been supported a little bit until today. But I chose not to trade it, and I just stuck with the Aussie because I think the Aussie rally has really, like on this Aussie Kiwi pair, has been really not supported fundamentally. And so I took 2 Aussie trades and the US Swiss, and I'm out of them now because, again, I think going into this weekend with Jackson Hole, we could potentially see some gaps in the market, and who knows what will happen with the trade talk over the weekend. If things soften up and Trump pulls back a little bit, softens his tone, or China does, that's going to weaken the yen, and all these things will reverse. But I don't think that's going to happen. I think we will continue to see these downtrends, at least for another session or two anyways. And it'll be interesting to see what happens with the British pound next week if that uptrend resumes too. But again, it's going to all be based on Brexit talk. So if you are holding trades through the weekend, hopefully it all works out for you. Obviously, it's too late to do anything about it now. But, because the trades I took, I opened today or yesterday, it was too close to my entry price to hold them through the weekend. So I just took the pips off the table and I banked them, and it was a good day. So anyway, that's it, guys. So, we went from a really quiet week to ending with a bang. Thanks to President Trump and China and the European Union and the UK. So that's the way it goes. That's why you got to stay at least tuned into the news wires. You don't have to watch them all day, but when you see stuff like this come up, this is your opportunity to make money. And just following the technicals on charts is not going to do it. You got to stay tuned into what's happening in the market, and that's what causes these nice big moves. It's not the charts and it's not technicals. So anyways, guys, I'll leave it there. I hope you have a great weekend, a good week coming up. And, as far as next week goes, on the calendar, this is, I'm not going to go through this, but we got the G7 meetings. We have Jackson Hole will be wrapping up on Sunday, but then the G7 countries are meeting Sunday and Monday. That may or may not do anything. Then we have a lot of dollar news next week. Durable goods Monday, consumer confidence Tuesday, crude oil Wednesday, preliminary GDP Thursday. So there's a lot of stuff coming out. We have CPI estimates from the Eurozone on Friday. That'll be important for the euro, although really the euro is looking ahead to the September 12th ECB meeting. So unless these are really out of whack, these may not do that much. And I think this Canadian news on next Friday, GDP, is going to be really important. Because if this comes in order for this to be tradable, I think this is going to have to come out worse than expected, a negative number here, because the Canadian data has been very, very supportive of the Canadian, but the market's not buying it, and they're waiting for the global slowdown to catch up with Canada. So if this comes out positive or as expected, I expect it'll have very little effect But if it comes out with a big miss, this could be a good trade next Friday. So watch the Canadian dollar GDP next Friday. And that's about it. We have PCE on the dollar. And again, this is an important figure. So next Friday is a couple of good things. And then we have some other U.S. data sprinkled throughout here. So outside of that, I think it'll be about risk tone next week, risk on, risk off, and keep an eye on what's happening with the British pound and Brexit talk, and that, and see what happens with the pound next week. So anyways, guys, that's it. If you liked the video, please like it, comment, share it. If you're just finding the channel for the first time, hit subscribe, hit the little bell notification icon to be alerted when I post a new video. And I hope you guys have a fantastic weekend, and I will talk to you all next week, hopefully. Thanks.